Good afternoon, traders. This is Kobus Kemp of Cape Town from SA Forex Trading, and I quickly want to show you how the market presents opportunities to us and when we can buy or sell these opportunities, how we wait for the setup and then pull the trigger if the setups works out. Now, one thing that is presenting to us at the moment is the Aussie Swiss, and I want to explain to you why I think this is a very good opportunity to buy. I want to buy firstly because this is a corrective channel. This is an overlapping wave and I can see that is going to the downside, so I want to trade in the opposite direction. Obviously, if I look at this chart, this is a daily chart. I can see this is a very nice demand area where this market has now responded from. If I put in a yellow box there, this is a demand zone. I see how the market now came back, tested this demand zone, and now is responding from this demand zone. That is a very nice area for me to get into a buy. Obviously, I want to look how the market responds from this area, and now I'm going to zoom in to my 4-hour chart. If I put in my support there at the last low, I can see the tails of the wicks of the candles are showing me to the downside. So that means that the market is going into the opposite direction. As we're responding from this demand zone, I can see this market is responding, very important, in an impulse manner. Now, impulse is a 5-wave rally or a 5-wave decline, and that shows me the direction that the market is going to build the trend. I also can see here that there is divergence. If I go down to a 1-hour chart, there is my Elliott wave principle labeling. I see there is divergence between my 3rd and 5th wave. Also down at my RSI, you can see that the RSI is showing me a lower high when my price is giving me a higher high. So now the market is complete with a 5-wave impulse and now is in a correction. I can see it is in a correction because the market is now overlapping. The highs and the lows on each other's way, and now I'm looking for opportunity to buy. If I put in my Fibonacci tool here from the top to the bottom, I can see here that the 618 is here at around 170, call it 70, 80. That's the area that I'm looking for to buy. Right. Zoom in a little more on the 1-hour. I can see this very strong candle. This is a breakout candle to the upside. See what happens before that candle? That is another demand zone. So that demand zone is very close to the 618. That is an area that I will be looking to buy. And one thing that I do also know is that the market, when it corrects, it will make equal legs most of the time. And there I can see that the equal legs between my 618 and my 78.6% Fibonacci, that's the area where I'll be looking for to buy. That's a buying opportunity, an impulse, responding from a demanding zone, coming back in a correction, and now I want to buy this market. Where will this market go? Most probably, as this is only my 1 and 2 from the new cycle, I can suspect this market to go up to 7,800. That is my target area. I will put my stops 50 pips below this low because below that support line, my count is invalid. I like this trade because there was nothing happening for a few months. From February, March, this market is just in a correction manner, and suddenly as we hit that demand zone level, it is responding in an impulse wave. It is now coming back in a correction, and I want to buy this market. Also, if I look at the daily chart, if I zoom in a little bit more, if I can use my imagination here, you can see this is a double head and shoulder pattern. So that's a longer term pattern where I can be looking for buying the right shoulder here, as it is an impulse coming back with a correction, buying in the way of in the direction of the trend. Now, if you want to be trained like this, please give me a call. You can inbox me on Facebook or you can email me at kempfxtrading@gmail.com. I will train you. I will show you how to analyze this market. I will show you where the opportunities and the setups are. Please contact me. This is Kobus Kemp. Thank you very much.